What's up, everybody? Welcome to the April 13th, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by IndiWealth. Today, we're going to get right into those hot button market issues. So let's get started. First, we're going to start with no Iran deal, and subsequently, oil went back up over $100. We're in, again, seesaw mode here. The market is paying most attention to this. Again, we're on that kind of trajectory of things are progressing, oil comes down, market tends to go up. And conversely, and what we're experiencing here early on is the other, is no deal. Oil goes back above 100, markets react negatively. So tough to build a real investable thesis around this kind of seesaw activity. I would say generally this is obviously not good news. It'd be better if there were a ceasefire deal. It'd be better if there were oil was back under $100 and trajecting towards the normalized range of that $60 to $80 tends to be where we think normalized is. But we're not there. And the longer we're in the scenario of $100 plus oil, in my opinion, is going to lead to more negative outcomes down the road. Again, are we in red line territory from the economy and anything like that? No, we're not there now. But you're going to see in number 2 here that there is some data that is starting to suggest that this is working its way into the system and it could have a negative influence on consumer sentiment and therefore economic growth in the coming quarters. So turning to number 2, we have inflation and consumer sentiment data came out last week, and I would call both of them disappointing. Inflation data, the one, I guess, positive takeaway you could get from inflation data, it was slightly better than expected. But both core inflation and headline. Headline includes oil and food. Core does not. Both of them accelerated. So headline increased to 3.3%. Expectations were 3.4%. So again, slightly better. And core inflation went to 2.6%. Again, slightly better than expected. Both of those, in my opinion, are though relatively negative because we're reaccelerating inflation in an area where the Federal Reserve still is not in that 2 to 2.5% range of they believe is controlled inflation. So we are still elevated above it and we're going the wrong way. So in my opinion, now again, the Federal Reserve talks a lot about core because they reduce the volatility of pricing increases and things that they're going to take action on because oil and food can be pretty volatile. From our side here, we pay a lot of attention to headline inflation just simply because we look at it as much more of a consumer metric and what the consumer is feeling pain on from a price perspective. And oil and food is right in there. If you're paying $1.50 more at the gas pump, that's inflation you feel, and that's less things you can do with money and the things you want to do with your money, which is how our economy grows. So inflation to us and headline inflation is important, and I would not call that great. The consumer sentiment side is by no means good. I mean, it has reached I believe, an all-time low level here. And again, I always take a grain of salt on the consumer sentiment because I'm much more watching what consumer does rather than what consumer says. Because in an area in this low hire, low fire environment, again, the jobs market isn't great, but it isn't terrible either. We're not at 6-7% unemployment. We're at relatively low unemployment. We're just not adding a lot of jobs. So that leads to less positive sentiment overall. And then sentiment obviously has a big indicator of if you're going to the gas pump. And again, you were paying $50 before, now you're paying $75, $80. You're not going to be too thrilled about that when you're putting through because you still have to go to work. You still have to take the kids to lessons, whatever you may have to do. You still got to do that. And now it's more expensive to do it, which allows you less to do for other stuff. So again, I'm going to talk about it in number 3, but we're going to be watching consumer action over consumer sentiment a little bit more closely. But this is obviously, when you take these two and you take number 1, it's not great backdrop for the overall economy right now. And over longer periods of time, what the economy does and what the stock market does tends to correlate. But there are periods of disruption. You're seeing earnings are still expected to grow very well, which I'll get into here in a bit. But overall, the economic backbone of the company earnings doesn't seem to be going quite as well. So on number 3, we have financials reporting this week. And earnings season really does begin this week in earnest. Goldman Sachs started it. They reported numbers this morning. I would call them okay. They weren't outstanding, but they weren't bad either. But Goldman, I don't use Goldman as a correlation to a lot of economic data and a lot of what the consumers are feeling, because they're more investment oriented, they're investment banking, and they're trading, and their wealth management. So important components, but I want to know a little bit more about the traditional banking side. So your JP Morgans, your Bank of Americas, your Wells Fargos, which have those same components that Goldman Sachs does, but also have traditional banking structure, loans and credit card spending. That's what we'll be paying attention to. I think the financials give a good stealth way to look at the consumer right away, because you start to see what happens with credit card data, and are they adjusting spending? Are delinquencies rising? What is happening there? And then also from the business side, you start to see loan growth. Are they changing what they're doing from a capital expenditures because oil went from 60 to $100? These are the kinds of things that I pay attention to with financials, not just in their own reports, but more importantly, what they're talking about and what their consumer base and their business base feels like. So that's what I'll be paying a lot of attention to this week. Gives us that early indication, because most consumer facing companies, your Targets, your Walmarts of the world, they don't report for another month. And so I like to use the financials as kind of the first backdrop into what the consumer has been doing and is doing currently. Turning to number 4, is a pretty decent sports weekend. We had the Masters and we had the end of the NBA season. The Masters, Rory, back-to-back Masters titles, which is awesome. Good for him. Congratulations. Most of you may know at this point by now, because I talk about it ad nauseum, is that I'm a pretty big Timberwolves fan. We didn't do so high. We're going to get Denver in the first round. So we're the 6th seed and Denver is the 3 seed. And Denver is one of the best teams in the league. So it's going to be a tough challenge. We've beat them before. I think we can beat them again. But it would have been better to have maybe a little bit easier road in the first round of the playoffs. But we'll see. But now is the fun part for me for the NBA season. I think the first rounds of the playoffs are usually a lot of fun, because there's games pretty much every night, and there's usually some surprises that happen and that kind of stuff. So I'll be tuning in pretty aggressively, and it'll be fun. But also congratulations to Rory McIlroy and his back-to-back titles at the Masters. So that's all we have for this week. Tune in next week where we'll have our next hot button issues. But until then, thank you very much. Take care.